Hey everyone, welcome back for another dividend investing video. As we wrap up another month, it is time once again to check in on the public portfolio I'm sharing on this channel. I started this portfolio in mid-September of 2022, a few weeks after I started posting videos on the channel, and I started it from scratch. As the portfolio is now over 4 months old, with consistent contributions, the portfolio's value has been slowly growing. In today's video, I will take you through the activity in the portfolio from January, where things stand, dividends received, future dividends expected, and forecast and plan going forward. I'm Nick, and this is the Dividend Growth Income Channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So when we last looked at the portfolio at the end of 2022, we were sitting at just over $3,000 between some dividend growth stocks and ETFs. We were just shy of hitting $100 in forward annual income. Today, after the markets closed on January 31st, we are now valued at over $4,100 and have passed our first goal of $100 in forward dividend income annually. I'm building this up slowly with steady, small weekly contributions and purchases. Each little step here is when I added money. I'm going to bring in my spreadsheet, something I'm still working on. I have been getting a lot of interest from others, and once I'm happy with this and I have it in a place where it's shareable, I'm going to make a copy available for subscribers, but we aren't quite there just yet. The first tab I want to show is contributions. What I've been doing in this account is buying every Wednesday with whatever I've been able to add that week. I mentioned in the last portfolio update video that my goal was to add $10,000 to this portfolio for the year of 2023. In January, I managed to put $250 in for each Wednesday. This is giving us a good start to the year, and I added a little section here on the spreadsheet to track that progress. Right now, we are 10% of the way there with 11 months still to go, so we are in good shape as far as contribution goals are concerned. For February, I'm expecting to add 200 to 250 each week, ideally 250 if I can. And for reference, saving $200 a week on average will allow me to at least hit this goal, as $200 times 52 is $10,400. If I can go a little heavier when I'm able, that gives me some leeway if later in the year I find myself needing that extra cash for other purposes. In fact, by the time this is posted, I'll have added another $250 for February's first purchases, which is tomorrow or probably the day this is being posted. So getting $10,000 this year, that should bring our portfolio value around the $15,000 mark by the end of the year, just depending on how the markets perform. And the other goal I have for 2023 is to hit the average of $1 a day in forward income in this account. So let's bring you to my dashboard tab and I'll show you that. The first goal was to hit $100 in forward dividend income. We didn't quite make it in 2022, but with my first purchases in 2023, we did pass that. Now we are at $127.55 in forward annual income. My next goal, the $1 a day. To get that, I'm just dividing the forward annual income by 365. Currently, we're almost 35% of the way there, and I see no reason we don't hit this. But one thing I want to make sure I'm clear on is I'm not going to go heavy on a bunch of high-yield stocks just to make those goals. My goal is to have the portfolio yielding just above 3% with high single-digit to double-digit annual dividend growth. I think with the stocks we're investing in, we're on a good path. Interestingly, we are already 10% of the way to $100 a month. We've had this portfolio for just over 4 months, so that shows what small, consistent contributions can do in short periods of time even. I expect we should have this portfolio at the point by the end of 2024. If we stay what we're doing right now, we'll have $100 a month coming in. Consistency is so key here. Time in the market, letting your dividends compound is so much more important than trying to time things. And that's the idea behind dollar cost averaging. A few more things on the dashboard here I'll point out. We have our fund value at $4,140.25, and this is a 4.32% gain in what's been invested, which is about $3,950, and about $18 to $19 in dividends and interest. This portfolio is yielding 3.08%, and its yield on the initial cost is 3.21%. We've collected almost $18 in dividends, so that extra dollar in the cost basis is interest paid from Fidelity at the end of each month. Another cool way to look at this is once we've passed $120 in forward income, this portfolio is averaging $10 per month. And sure, this isn't a lot of money, but 5 months ago, this wasn't generating anything. And in a few months with small dollar cost average purchases, we're already bringing in $10 a month. The first few dividends were just a couple cents, and now I have dividends coming in that are a few dollars. The snowball is starting to take effect, and I'm glad we've started a portfolio from scratch here on the channel to let others see it happen in real time, that it is possible, and anyone can do this. I made a nifty little graph here as well to visualize how that forward annual income is paid out throughout the course of the year. We're still very heavy on those March, June, September, December months, but it's building up all across the board. We are on the verge of having our first $20+ month of dividends in the month of March. For January, we brought in $5.17 in dividends. Not a lot, but compare that to the 71 cents we made in the last quarter in October, and just imagine what April will look like. I'm expecting that to be over $10 by that time. And it's best to compare our dividends quarterly, since most of our stocks pay out on a quarterly schedule in certain months. So you compare June to September to December to March, and February to May to August to November, just like that. All right, we're back in Fidelity now. Let's go over what I purchased in January. With the first $250 on Wednesday, January 4th, the first purchase of 2023, I added $30 each into 8 stocks: Waste Management, Walgreens, United Health Group, Main Street Capital, Kroger, Kinder Morgan, Automatic Data Processing, and Medtronic. This is the group I've been down on the most, so I bought them first. I had about $10 left over, and I put that into VOO, the S&P 500 index. On January 11th, I used another $250, and I put $30 into 8 more stocks. I bought Procter & Gamble, NextEra Energy, Mondelez, Lockheed Martin, Chevron, Amgen, Agri Realty, and AT&T. And again, I had $10 left, and that went back into VOO. Any chance I can increase my exposure to the S&P, I do so. Then on January 18th, I added another $250 and purchased $30 each of 8 more stocks: Snap-on, Home Depot, Comcast, Cisco, Broadcom, BlackRock, Best Buy, and Aflac. And of course, the final $10 went back into VOO. Finally, on January 25th, I focused solely on my ETFs. I added the final $250 for January. I put $100 in SCHD, the Schwab US Dividend Equity ETF, $100 into VYM, the Vanguard High Dividend Yield Index ETF, and the last $50 into, of course, VOO, the S&P 500 Index. We also reinvested some dividends, so let's look at dividends paid. We started the month with 2 dividend payments on January 3rd, ADP with 37 cents and Best Buy with 92 cents. This 18 cents from Main Street Capital is actually counted with last December. For some reason, Fidelity takes a few extra days to process their dividends. It was a Q4 special dividend. Now, on the 13th, we received 2 dividend payments. That's 32 cents from Agri Realty. They pay me every month. And also 74 cents from Mondelez. On the 18th, Medtronic gave us 56 cents. That was reinvested. On the 19th, Main Street Capital and its monthly payout of 72 cents, paid and reinvested. Let's see, this was supposed to have been done on the 13th. So for some reason, Main Street Capital takes a few extra days in Fidelity. I couldn't tell you why. Medtronic too, but I believe that's probably because they are an Irish company. Then on January 25th, we received 2 final dividend payments for the month. We had Cisco Systems coming in at 78 cents and Comcast in at 76 cents, both reinvested. Altogether, we collected $5.17 in dividend income, all reinvested, as I showed you that on the dashboard. Here's how that looks in my spreadsheet where I entered all of my dividend income. And here's how the projected annual income looks based on what we have now. Even if we did nothing in February and March, no purchases, I'll still do way better in April than I did in January. Remember, it's helpful to compare 3 months back. We'd be collecting about $7 in dividends in April. But with the purchases that I make in February and March, I predict we end up collecting closer to $9 or $10 in dividends for April. But let's look closer ahead to February. The payments I end up with might be slightly less if I happen to purchase some of this after the ex-dividend date, but we'll be getting 5 dividend payments in February. February, May, August, November are my weakest months in the portfolio. The dividends will be coming in from Agri Realty and Main Street Capital as they do every month. And we'll also be getting paid from 3 other companies: Procter & Gamble, AT&T, and Kinder Morgan. Now, I know it's not much, and the average person might look at this and think, what the hell are you doing making $10 a month? But every portfolio starts from somewhere, guys. You can't get to $100 a month without first getting to $10 a month. And you can't get to $1,000 a month without first getting to $100 a month. Dividend investing is a journey. You aren't going to get rich quick, but you can get rich slow and build yourself a nice stream of passive income by just putting your head down for a few years, cut down your expenses so you can stack up as much as you can. And before you know it, your portfolio will be paying you more in dividends every month than you were contributing every month when you first started. The snowball effect is real. All right, guys, I have 2 more pages I want to show you. The next one you're probably waiting to see, and it's all the holdings together. I have this page that lets you sort everything, which is useful. Here I have it sorted alphabetically, but let's sort it by weight. Okay, SCHD and VYM both at the top, both right at 10% of the fund. So interesting that I've been buying these two together in equal amounts, and they have performance that's been almost identical. I also let Dividends reinvest with these, but the values of the two funds here are within $1 of each other. Both are up just under 5%. The next largest holding is VOO, the S&P 500, and we have just over $300 worth of that one, sitting on a 5% gain as the markets have been climbing. I want ETFs to make up 25 to 30% of the fund, and I'm very pleased with how these are looking. They bring in the largest amount of dividend income so far. Next, let's sort by performance. Our top performers here are Best Buy, Comcast, Broadcom, BlackRock, and Aflac. I'm up over 20% on Best Buy and 18% on Comcast. I put out a video saying Comcast was to buy a few months back when it was under $30, and really I think it's still looking pretty good where it's at, but it really has recovered. Now let's reverse this and see what has been underperforming. My worst performers are Next Era Energy, down 7.71%. They had a pretty rough earnings if I recall. Walgreens is down 7.24%, and Automatic Data Processing down 6.61%. I think that one's getting to be an appealing opportunity all across the board as well. I'm going to be adding to these positions next. And look at Walgreens there yielding over 5%, right? So that's where things stand. And lastly, I'll show you the diversification page I'm working on. Okay, so we have index funds and ETFs making up 24% of the fund. Consumer staples is next at 11.5%. Finance and technology both around 9%. So those are my largest sectors. This chart shows you how the income I earn is distributed by sector. Just another way to see things. I don't like to be too heavy in any one sector, but I don't put a whole lot of worry into it. I buy what I think is best. One more thing, I did get 3 raises from companies in January. Those companies are Comcast with a 7.74% increase, Chevron with a 6% increase, and BlackRock with a 2.5% increase. So that's another way that my income has gone up in this account over the last month. I did go into more detail in a video I put out last week reviewing these increases. And I also highlighted about half a dozen more that came out in January. So I invite you to check that video out next. I think you might find some value there, hopefully, right? So that's the Dividend Growth Income portfolio after its 4th month of existence. Next, I'm going to make the next update in my Roth IRA series, where I'm doing weekly SCHD purchases, and I'm going to reveal the 3 REITs I bought yesterday after I made all my SCHD purchases for the month with the extra funds I contributed. So make sure you hit the notification bell so you don't want to miss that. I did buy a new stock, and I'll reveal that in that next video. If you managed to stick around this long, you are my people. I appreciate you. So help me out with the algorithm. Make sure you are subscribed. If you aren't following me on Twitter, please check me out there at DivGrowthIncome and let's connect. And until next time, folks, keep investing.